All right, good morning, everyone. It is 8:26 in the morning of February the 10th, 2021, and this is sort of my pre-market strategy session. So I got into the office only about 15 minutes ago, and I haven't had a lot of time to do my pre-market workup. But what I'm doing basically right here is I am putting the pre-market. This is the SPY and the pre-market. So let's get rid of the fib retracement here. And then you can see this orange shaded section. This is the pre-market, and the blue shaded section was yesterday's post-market. And the CPI reading comes out at 8:30. So let's see, and it's 8:27 right now. I wonder if I have a clock. I wish, Windows did things differently. Let's see if there's a clock that I can overlay. Yeah, here's a clock. See if I can put that. Yeah, there it goes right there. So when that hits 8:30, let's see if there's a digital version of it. 9, 4. No, I don't see the digital version. All right. Well, so maybe I can make it bigger. See if I can increase the size. No, can't really increase the size. Okay. Oh, let's pull that clock back up. Where did it go? There it is. Okay. Oh, wow, look at that. So, yeah, when this thing hits 8:30, I wonder what that was all about right there. The SPY just did that spike down thing. It's so strange when it does that. Let me see if I can see anything on my level 2. I do have my level 2 pulled up. 455.90. Scrolling down here, I don't see any prices. All the prices are hovering right around 455, 455 even, 456, 456. Yeah, all right. I don't know quite what's going on with that. Maybe the report came out early. That happens sometimes. Or it could be just people start placing their trades just a couple minutes before the read. All right, so I mean, right now it's off. The SPY's off 0.5%, and there's about I don't know, a minute or so to go. I moved the clock again. Darn it. All right, well, 8:29 and 54, 55. So we're coming up to 8:30 in 3 seconds. 2, 1, 0. Now the data should be coming out. Let's see if Yahoo has it. Oh, still nothing showing up on Yahoo yet. Actually, let me go to Street Smart Edge. Street Smart Edge will have it. SPY, breaking news. There's nothing there. We got an alert on the Qs. Oh wow, okay. Yeah, the Qs definitely going down to test that Fibonacci. Actually, let's back out here. This is only the 1 minute and kind of get a look at what's going on here. So here's the daily. This is the Qs from the 22nd of November to this low here on the 24th of January. And the Fibonacci, I put this level on yesterday. Let's get rid of the Fibonacci. So there's the Fibonacci on it. I ran it from the top here on the 22nd of November to the bottom here on the 24th of January. And you can see here's the 50% level, here's the 61.8 fib and the 38.2 fib. And right now, this is the daily, so the pre-market doesn't show up that clearly on the daily. So I'm going to get rid of that fib real quick, and you can see this 362.63, that's the 38.2 fib. You can see here on the 10-minute, it's kind of punching down here pre-market, down past that 38.2 fib. So yeah. All right. Um, whatever. I don't know what the news is on. I'm getting a delay on the news here, which is actually, I don't. I tend not to trade the news anyway. Breaking news. Here we go. Enterprise jobless claims. PG&E reports higher non-GAAP earnings. Buzz Venmo slumps. I'm still not seeing any headlines on CPI. Okay, well, whatever. So this is the Qs right now. Looks like after CPI was released, dropped about 1.5%, one and a third percent there. And the SPY, let's see. I mean, a similar formation on the SPY. Dropped down 1.15%. So a little bit of a negative reaction there. Now, the initial reaction isn't always the sustained reaction. After some, once the headline number comes out, there's still more under the hood. So when you've got all the different sort of sectors, it's fuel. It's probably a pretty surprising number because they did some kind of trick with it this time. They've done something with CPI in order to somehow kind of bring forward the comps, and they're doing some kind of a trick for the year 2019 to 2020, because I think that's kind of considered a normal year. So if inflation is compared, if 2021's inflation is, or even January of 2022's inflation is compared to the level of inflation from January 2021, then I think it's a number that's so out of whack that the reading would be absurd. Because from 2019 to 2020, from the beginning of 2019 to the end of 2019, we'll just say, that year was the last year that the economy was somewhat normal since all the shutdowns occurred. So, in the beginning of 2020, the shutdowns occurred, and people were out of work. There was, the market crashed. There was a deflationary event, really, rather significant deflationary event. And so the comparison year over year in 2022 to what it would have been at the beginning of 2021, I think the numbers would have been absurd. So I think they're jumping back to the year 2020 for comparisons. Now, that doesn't mean that inflation won't still be heightened. I'm pretty sure it will be. Let's see if the headline comes up yet. Here we go. Okay, January CPI inflation reaches fresh 40-year high. The Consumer Price Index released by the Bureau of Labor Statistics Thursday morning registered a 7.5% annual gain. Okay, so that means the Fed's going to tighten definitely in March next month, and then there will probably be there'll probably be a few hikes coming up, and so the market is going to start pricing in the rate hikes, and I don't think. So the market is priced in, whoever on Wall Street, and I've forgotten who it is, somebody was saying, hey, yeah, we're, the 4 rate hikes are priced in. This is the correction from the 4 rate hikes. It's over. It's done. We're good. It's time to come back out and start investing your money again. I don't know. I think it's kind of too early to be able to tell something like that. So there was this relief rally. And this relief, let's put the fib up here real quick, because this relief rally, went right up to the 61.8 fib right here. This is this price at 457.36, and it hit resistance there, and it hit resistance again, and now it's kind of bouncing away again. So I mean, if you kind of look at it this way, it's like A leg, B leg, C leg coming up next. and if this is any measure, if this distance, let's say 479 to 420, so that's a let's do the percentage here. That's roughly, so it's a 12% move, 12.37. Let me get rid of that. Let's pull up the handy dandy trusty calculator here. So let's see. So let's go. All right. So 1 minus .1237 equals 87. Okay. And our current price. Suppose it drops. The 61.8 is the level. That's the top of this B leg, and now the C leg is coming. So let's multiply that by time 457. What is it, 36? Yeah, .36. So the next leg down could potentially go to the level of 400. That is if it puts in this pattern, this A leg, B leg, C leg. And it makes sense that it would go down there because there's still a gap down there. Let me put this on auto. There it goes. So here's the gap, and this gap was put in. So in a technical sense, this gap needs to be repaired. So here, the close of April 1st to the open of April 5th, there's a roughly 3-point gap there. And all gaps eventually come back and get filled, And so a move from, let's say, from top to bottom, and it would, a bounce off of the bottom of the gap would be ideal. That'd be a great place. I think that would be a great place to jump back in. From a technical perspective, we'll have to see how the fundamentals are doing at that point. But a move from there to there, I mean, it's a 16.56% move all in all. That's that 16.56% correction is great, because that would put it still north of negative 20%. Once it gets below 20%, it's technically it's a bear market. So to see it, come down here, fill the gap, and then kind of move on from there, whether the S&P, whether buyers, whatever it is, it would be nice to see this level hold, and then we can just kind of move away from that 400 level and continue on our merry way after a good correction. I mean, who doesn't like to get a 15% discount on whatever their favorite stock is, and just kind of sit back with it and hold it for a long time, large cap dividend payer, for the time being, again, still, I'm bearish because of Hedgeye. Hedgeye is really quite bearish right now, and that's pretty much what's going on. So I'll be looking for opportunities, to get in on the short side on Tesla. Same thing with Amazon, the SPY, and the Qs. These four things, they've been really, I don't want to say they're easy to trade. Tesla and Amazon, I think, are easier to trade than the SPY and the Qs. Tesla and Amazon behave really well with their technicals and the way the trade's set up. Basically, I am looking forward to trading these four at given times during the day. All right, everybody. Good luck out there. Let's take a look. Let's take a look at crypto real quick. Bitcoin. Bitcoin's a wild card. For as many times as Bitcoin has been explained to me, I still don't understand it. It's a ledger. It's I just don't understand. I still don't understand it. It's a cryptographic currency that government can't tamper with, but damn well that if somebody wants to regulate Bitcoin or any of these other cryptocurrencies, they're going to. But apparently, this thing, from the fundamental stance, though, I still don't understand really I don't understand how to trade it. Like if I go look at a company and I look at its balance sheet, its income statement, It's gosh, oh my gosh, balance sheet, income statement. Oh my gosh, I can't believe I can't remember the other report. Anyway, then I can dig in. I can look at its earnings. You look at its revenues, top line revenues, and bottom line earnings, and everything in between to see how they got to that number. And you can kind of decipher. Is this company strong? Is it going to be around for a while or what? But there's nothing really like that for Bitcoin. So it's all technicals. So right now, what I'm seeing right now with what's going on here, right, is that in this zone down here, it's bearish. Now it caught support. I put the support line in back here at some point. And so it really respected, this bounce right here off of the support line is being respected. Now, here's the high over here. Let's see, this yellow line, this yellow dotted line demarcates, I don't want to call it demarcation, but the 7th of January, it put in this 42,000 level and then came back and broke through it, came close to testing it. Let's make it bigger so it's easier to see. So it came up here, pulled back, put in a bottom, real nice bottom too. Blasted through that 42,000 level, took off to the upside, came back to test 42,000, but didn't quite make it there. Buyers started popping in before it hit 42,000, which was an obvious support and resistance area. So if you're working in percentage terms of percentage, and you're getting it close to, if you're getting it at 43,000, then what in percentage terms, 42,000. I mean, this is kind of a 4%, roughly 4 to 5% drawdown to go all the way to the support channel. But some people are willing to take that chance if they're long term, kind of thing. And so then it took off, up here to the upside, and then it put in this head and shoulders. And actually, you know what? I ought to do, this is a textbook head and shoulders pattern right here. It doesn't get much more textbook than that. And then I came back down below the 42,000 here, and then kind of did this wedgish thing for a little bit, popped up, actually made an incredible recovery right here, popped that back down below. I was expecting it to go back down to 20,000 from this point. And when it didn't, and it started breaking above, and it broke back above the neckline on the head and shoulders right here, that's about when I put this line in. That's when I put this support line of support in. I was like, that's very interesting, because it's really unusual. And so then here it came back above 42,000 again, and then broke through and went to all-time highs. And it did a look above and fail. So here's the all-time high right here. I'm gonna make this level disappear. Let's see if I can. There it is, right there. All right. So look above and fail, look above and fail, and then look above and fail again, and and then here, 3 strikes are out. Here is, let's see, strike 1, couldn't hold above the price, busted through, couldn't hold the price there again, and then strike 3, and you're out, and it went bye-bye. Price went down, right? So rather significant correction here. It came down, hit this 42,000. I remember watching this. I was in my office when this happened, actually. And 42,000 acted as a huge support right here on this day on the 4th of December. So people are watching these numbers. People are watching 42,000. There are people who are watching these things, right? Well, okay, so now here we are. Came down all the way back down to this support line that I put in after it popped through its neckline again. So here it is at the support line right here, bounced off of it, and is now making it back into 42,000. I'm calling this area neutral. This area is bullish. If we get back into this area right here and hold, it's only a matter of time. If we get back above 53,000, it's only a matter of time until it starts testing the all-time highs. Now, personally, I think it'll bust right through it, but that's pure speculation. And the only reason that I think of it that way is because if this thing's going to have momentum to make it all the way from 33,000 back to 65,000, there's going to be FOMO, and there are going to be people who are going to be jumping on the thing being like, it's going to 100, it's going to 100K. So, All right, so here I put this line, this circle right here is yellow. This is neutral. If it gets in here, I wouldn't be surprised to see it kind of just bounce around in here for quite some time. If it goes all the way up to here, retests, it's headed toward the all-time highs. Now there could be another instance where it bumps its head and can't make it through the all-time highs, and then it'll get rejected again. That's always a possibility, of course. So then the next area down here, this is the bearish area. So if this thing starts closing back down below 42,000 again, it closes down below 42,000 again, retests and fails, then it's going for the support line. Now it's possible it could just blast through the support line, but it's also possible it could bounce up and then blast and then bounce down and just kind of do a zigzag here for a while, which is actually still bullish because this is a rising support line. So, all right, that's my take on Bitcoin. And the way that I play Bitcoin is with the secondaries. So there's Riot, which pre-market here you can see it's getting a haircut, 4% haircut. So all of the secondaries are getting a beat down. And I'm guessing, it's just so hard to say. Because this thing hasn't behaved the way that I thought it would. Like, for example, I would think that with Fed tightening and rates going up and liquidity drying up, that Bitcoin would have been tanking. It would have just been going down this whole time. But here, from 32,000 to 45,000, that's what, 30-some%, right? That's at least 30%. Let's see, from there to there. Yeah, it's made a 38% move, in the past January to February. Huge move, while rates are going up. Let's look at the risk range. Actually, I need to update these numbers too. There are the rates. Rates are headed up. People are selling bonds. That's not going to last long. This is going to be a great opportunity. There's going to be a great opportunity to buy bonds coming up in the next, I'd say 4 to 8 weeks. You're going to want to be long bonds because these yields are going to come crashing down again once CPI and GDP come crashing down again, which is expected in Quad 2. So, buy the dips, sell the rips. And so, going along bonds is the same thing as being short rates. So there will be an opportunity, and this move will be exaggerated. That's what Wall Street always does. It's going to get everybody to sell their bonds, and then at some point when this thing gets to a crescendo of selling, on the bonds, that's when you buy. When there's just this huge volume, so on, and big spike, and so on, then it's time to buy bonds because rates will be falling back down again, and the value of the bonds will be going back up again. All right, everybody, that's my pre-market strategy session. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.